Return on invested capital is an impressive 27.1%. Revenue growth is a massive check at 47.3%. Okay, I have to say this company looks interesting. Hello friends, so today we are going to take a look at the best and worst performing companies from the S&P 500 in the last quarter. And we are going to mainly talk about the worst performing companies and just mention the best performing ones. Why is that? Well, if a company price is going down, then there may be a chance for us to find an investment opportunity. But if the price is going up, then, well, it just makes us feel good if we invested in that company before, but it does not create any new opportunities. And as investors, we of course have to remember that we should not allow the market to determine our decisions. If the price is going down, it does not mean that the company is cheap. We always have to value a company and then compare this value to the current price to understand, is it a bargain or not? So please don't treat this list as a list of companies that you should buy or sell, but just a list of potential ideas. And let's play a simple game before we start. So stop the video and write in the comments, what do you think is the best performing company and what do you think is the worst performing company in the last quarter? I wonder if you will get it right because both of those companies are pretty well known. Okay, so let's start with the worst performing companies. And at number 10, we have Walgreens Boots Alliance Incorporated, and in the last quarter, it was down by 20.7%. Walgreens Boots Alliance operates retail drugstores offering a wide range of prescription and non-prescription drugs, wellness products, and health services. If we look at some basic data, we see that return on invested capital is 8.2%, so a little below 10% that we are looking for. Revenue growth is 6.8%, also not very impressive, and it would take them over 10 years to pay the long-term debt with their free cash flow. And the dividend yield is a very impressive 4.8%. That is a nice dividend yield. Okay, and at number 9 we have Paramount Global, which went down by 21.2%. Paramount Global is a media and entertainment company that owns a diverse portfolio of brands and content, including CBS, Showtime, Nickelodeon, MTV, and Paramount Pictures. Its return on invested capital is a check at 10.2%, so that is a very nice beginning. Revenue growth is 7.8%, so below 10% that we are looking for, but not bad. And it would take them 23 years to pay the long-term debt. That is a very big problem. And the dividend yield is 1.7%, so a small dividend. 8th worst performing company in the last quarter is VF Corporation. It is down by 21.8%. VF Corporation is a global apparel and footwear company that owns well-known brands like the North Face, Vans, and Timberland. Return on invested capital is 11.4%, so that is a fair return. Revenue growth is just 0.2%, so the company is rather stagnant. And it would take them 4 years to pay the long-term debt with their free cash flow. We would like to see it under 2 years, so not the best situation. And the dividend yield is 2.5%, so nothing crazy when it comes to the dividend. 7th is Market Access Holdings, which is down by 22.3%. Market Access Holdings operates an electronic trading platform providing institutional investors with access to innovating trading technology. Return on invested capital is an impressive 27.1%. That is very good. Revenue growth is also a check at 12.2%, so the growth is nice, and it would take them just few months to pay the long-term debt. So that is a very healthy situation. They don't have any problem with debt. And the dividend yield is 1.3%. Okay, I have to say this company looks interesting at the first glance. Sixth is Warner Bros. Discovery. It is down by 22.6% in the last quarter. Warner Bros. Discovery is a media and entertainment company offering a vast array of content across various platforms including HBO Max, CNN, and Discovery Channel. Return on invested capital is an X at 3.7%, so not a very impressive return. Revenue growth is 22.3%, so the growth on the other hand is high. It would take them almost 7 years to pay the long-term debt, so that is another company with a substantial debt, and they are not paying any dividends. Fifth worst performing company is Charter Communications, which is down by 22.9%. Charter Communications is a broadband connectivity company providing cable television, internet, and telephone services to customers in the United States. Return on invested capital is just 3.3%, so nothing great. Revenue growth is a check at 20.9%, so that is impressive, and it would take them over 16 years to pay the long-term debt with their free cash flow. So that is a lot of debt. And no dividends from Charter Communications. Fourth place goes to Insulet Corporation, which is down by 22.9%. Insulet Corporation is a medical device company specializing in tubeless insulin pump technology for people with diabetes. Its return on invested capital is just 0.3%, so that is very low. Revenue growth is 21.3%, so a nice growth, and it would take them over 37 years to pay the long-term debt. That is a massive debt, the biggest on this list by far. And also here, no dividends. Third is Humana Incorporated, down by 23.3% in the last quarter. Humana Incorporated is a health insurance company providing a variety of health insurance plans and wellness programs to individuals and families. Return on invested capital is a check at 10.6%, and we want to see this number over 10%, so they just made it. Revenue growth is 9.9%, so they are super close to getting a check. And it would take them 3 years to pay the long-term debt. So it is a bit higher than what we like to see, but it's nothing crazy. And the dividend yield is at 1%, so we get a small dividend as well. Okay, this is probably a second company on this list that looks promising. And second place goes to Boeing Company, which went down by 27.9%. Boeing Company is a multinational corporation specializing in aerospace, defense, and security solutions. Return on invested capital is a check at 10.9%. That is okay. Revenue growth is an X at minus 1.1%, so that is a red flag. And it would take them over 10 years to pay the long-term debt. That is a lot. And Boeing is not paying any dividends. And the worst performing company last quarter is Tesla, which went down by 31.6%. Tesla Incorporated is an electric vehicle and clean energy company known for producing electric vehicles, energy storage solutions, and solar products. Return on invested capital is an X at minus 4.4% 10-year median return. But that does not tell the full story, because since 2020, it is no longer negative, and in 2023 they achieved a return of 24%. So the trend is very promising. Revenue growth is a massive check at 47.3%, so an incredible growth. And it would take them just over half a year to pay the long-term debt with a current free cash flow. So that is great. And Tesla is not paying any dividends at the moment. Well, it is a strong company, as we know, and the price fell down by over 31% in the last quarter. But to understand, is it cheap, we have to value it and compare this value to the current price. And when we look at our stock ranking, we see that Tesla is getting close to its fair value. But even at this lower price, there are almost 30 companies that are cheaper right now. Alright, these were the 10 companies from the S&P 500 that didn't do so well in the first quarter of 2024. So now let's take a look at the best performing companies. But we will just quickly look at this list without going into any details. The reason for that is that opportunities are created when the price is going down, not up. So the best performing list is just for our information, and maybe it will make us feel good about some of our investments. 10th place goes to Davida Incorporated, up by 30.6%. 9th is Ralph Lauren Corporation, up by 30.9%. 8th is Marathon Petroleum Corporation, up by 32%. Then we have Eaton Corporation, up by 32.2%. 6th place is occupied by Energy Incorporated, 34.1% up. 5th is Eli Lilly & Co., up by 35%. 4th place goes to General Electric Company, up by 39.4%. 3rd is Meta Platforms, which gained 43.7%. 2nd is Constellation Energy Corporation, up by 51%. And the best performer in the last quarter is, surprise, surprise, Nvidia Corporation, up by 87.2%. So that is our list. I wonder how well you did with your predictions. For me, Nvidia was pretty obvious, but I'm not really following Tesla that closely, so I did not expect that. Okay, thank you so much for watching, and see you in the next one.